Best crypto investing advice during a recession. Today I sit down with investing expert Anthony Pompliano. What will be the 3 best performing assets coming out of 2025? As he shares his strategy for crypto investing in 2025.
And so that's where you're seeing Bitcoin kind of trade down. So the impact on Bitcoin.
We, of course, go over Bitcoin, go over macro, go over tariffs.
The whole key here is these policies are not intended to make the stock market go up.
And watch today's whole video as we discuss Ethereum, Solana, and when altcoin season.
Then absolutely, you'll see, kind of that alt season that everyone salivates over.
Click the like button right now to support me. I just want to start off by setting the table for investors in the market in 2025. We are post-Liberation Day, meaning reciprocal tariffs. Trump has signed the executive order. How should investors be playing this?
I think everyone should just do what they were doing before. It all comes down to, are you a short-term investor or are you a long-term investor? If you're a short-term oriented investor, you're having a horrible day, right? You're trying to trade around something that's hyper volatile. That's an active negotiation. It's like in the public markets, if 2 companies are trying to do a deal, you don't know about that pretty much until they announce the deal. And so then the stock goes up or down. But throughout a negotiation, what you end up seeing is there's times where they think they're going to get it done, and there's times where they don't think. And so imagine if there was a stock ticker that was happening while the negotiation was happening, right? Obviously, it'd be super volatile. Well, that's what's happening right now is they're publicly negotiating all of this stuff. And so the stock market is gyrating in response. If you're a long-term investor, just keep dollar cost averaging into great assets and hold them for a long time. Like, amazing. This is a gift. Stock market went down 10% in 2 months. Okay, buy more. What was everyone complaining about? The S&P 500 is still up 5% over the last year. It's up, and people are freaking out. Whatever.
I think you're right that a lot of Bitcoiners, I think, can weather the storm because before Trump got elected, Bitcoin was under $69,000. We have all this chaos in Bitcoin still, as of the moment, in the 80s, low $80,000 range. So Bitcoiners don't care. They're willing to wait it out. For the crypto market in general, are tariffs good for crypto?
Well, I think that tariffs are not very impactful for crypto. So it's kind of like they're not good, they're not bad, right? Mainly because tariffs are not placed on software-based products. Now, what I do think, sorry, I don't know what I. Well, now what I do think is pretty important though is tariffs have an impact on investor sentiment. And that investor sentiment ends up impacting the crypto market. And so when there is uncertainty, investors, they kind of hold their money tight, right? They're not bullish, everything's going up, let me dump a bunch of money into the market. And so that's where you're seeing Bitcoin kind of trade down. So the impact on Bitcoin is not because like Bitcoin gets tariffed or anything like that. It's just the fact that what you're actually seeing is investors having uncertainty in the market. And so they're not going to actually start investing heavily again until they get that clarity. And, okay, let's wait. Like, again, Bitcoin is $69,000 in November. It's 80 something thousand today. What are we complaining about?
I want to take the macro, the tariffs to the natural conclusion in worst case scenario and best case scenario. Because the haters of tariffs would say worst case scenario is the US economy is like a giant ship. And if you start steering that ship to the iceberg, the pro-Trump people would say he can bring us back anytime. The negative Trump people would say it's hard to turn that ship if you get it going in the wrong direction. So if the worst case should happen, where would that put Bitcoin?
Well, first of all, I don't think we're steering towards a iceberg. I think instead what we're doing is we're building a fort around the ship so that if an iceberg comes near the ship, it can't hit the ship, right? Like that's the whole idea here is that what you're doing is you're protecting the American economy. You're protecting American companies. You're protecting the American worker. One of the things that always cracks me up is one of the critiques of tariffs is like, oh, it's protectionism. Like, duh. What do you think Canada's doing for their economy? What do you think Mexico's doing for their economy? What's China doing for their economy? They're trying to do what's best for their economy, their workers, their companies, et cetera. And so if you think of for Bitcoin, look, Bitcoin is sensitive to a degree, right? But the beauty of Bitcoin is that there is a core holder base that's not going to sell. They don't care about tariffs. They don't care about what's going on. They're just not selling. And so there's some natural floor to what that is. I think most people believe that we're still in a bull market in Bitcoin. And so that number of people who are unwilling to sell is much higher. I don't know. Could Bitcoin go to 80,000, 75,000, something like that? Sure. Could Bitcoin go to 50,000? Well, technically anything's possible, but I think that would be very, very unlikely just given how many kind of hardcore long-term holders there are. And to me, that's the most important thing, right? Is what is the percentage of people that regardless of what happens in the world, they're never selling? That number's bigger today than it was 4 or 5 years ago.
So that's worst case, 50K, and nobody knows, but best
No,
case.
I don't. Worst case would be way lower. I mean, like if you go to the extreme, right? Like technically Bitcoin could be worthless, but the odds of that actually happening are like 0.00001%, right? And so it's like, what is like the likely downside case, I think maybe is the way that investors think about this. And sure, the price can go lower. It's just unlikely that tariffs are going to be able to create a, let's say an 80% drop in Bitcoin if the stock market's only down 10%. There's some relationship there between Bitcoin's price and stock price. And so if stocks go down 10%, Bitcoin's gone down 30. If stocks go down 50%, then sure, Bitcoin can go down a lot, right? But if stocks kind of go down 10% and go sideways, Bitcoin's not going to go down 80%.
So the stock market is already down about 10%. Another 10% would be the recession, down 20%. And to me, what you just said is, okay, well, Bitcoin could easily, it went down 30 for the first 10. It could go down another 30 for the next 10. And that may be the recession close to floor for an asset like Bitcoin.
But even if it went down another 30% from here, like it wouldn't even be at 50, right? So if you kind of think about it from that perspective, again, it goes back to, again, these numbers, it's kind of like what could happen, we can like lick our finger and stick it in the air and hope that we're right. But really, I think that the key piece to this whole conversation is you get paid for the risk that you take. And 10 years ago, Bitcoin was very, very risky and there was tons of asymmetry. Today, Bitcoin is much less risky, but it is still pretty attractive potential future return based on what's happening in the world and the return that you could capture. How many people understand that, have bought Bitcoin and say, I'm not selling regardless of what happens in the world? Tens of millions, 100+ million people. Again, there's different estimates out there, but I just think that number is way higher than maybe people realize. And that's why you're seeing, even though the stock market is down 10%, Bitcoin is down. Technically, they're saying it's down 30%. I would argue that it kind of wicked up to 109 or whatever it is. It was really kind of trading around, 100 to 105,000. So it's probably closer to like down 20%. But again, numbers are numbers, right? So you got to look at what was the highest wick and measure off of that. So it's just not anything that's abnormal for Bitcoin in a bull market.
So that was potential worst case. Potential best case would be we already bottomed. This was the pain. Everybody kind of caves to America. Let's just go for a time, best case scenario in terms of how long this takes, in terms of recovering the economy, getting back to everything's good. What's the best case scenario?
Well, I don't think that the economy has to recover, right? The economy, nothing has changed between November and now other than improvements, right? So gasoline's at 4-year lows, egg prices are down, inflation has crashed from over 3% to now it's under 1.4%, according to metrics like Trueflation. And so what you've seen is you've actually seen the economy get stronger over the last 3 or 4 months. Now, what people look at is they look at the stock market as a proxy for the economy. And so they see stock market down, they think, oh, bad, right? Which again, for your investment portfolio, yeah, no one wants to see the stocks go down. But the actual underlying economy seems still strong, right? Now, people will point to things like, the Atlanta Fed's GDP now number. And there's all these different ways. When you have, 100 data points, someone will always pick one and try to figure out how to tell a narrative. But I do think that the best case scenario here is you essentially create an environment where these other nations, they give up their tariffs, they drop those tariffs. They say, we are not going to manipulate our currencies. We're not going to subsidize our producers. We're not going to try to take advantage of the United States. And you see an explosion of American manufacturing, American job creation, and ultimately that kind of rocking economy brings stock prices, crypto prices, everything come roaring back. And so my base case is that we'll see all-time highs in stocks and crypto by the end of 2025. What that number is, again, if Bitcoin goes to 110, Bitcoiners will be out there yelling and screaming, new all-time high. We're geniuses. But I don't think that that's necessarily the number that a lot of people were excited about in 2025. There's people throwing out huge price predictions or whatever. And so let's see what happens.
Something that I think something that I think about is, in a way, this bear market or just pain market, whatever you want to call it, it was manufactured, meaning is because of specific policies that were created that suppressed trading or increased fear. Because the bear market was so manufactured, do you think that the bull market we could right back can be just as manufactured in a good way?
Well, I think that economic policies matter, right? And if you go and you do things that create uncertainty, then obviously you're going to get sell off in asset prices. But the whole key here is these policies are not intended to make the stock market go up, right? So like I always look at these situations and I say, okay, let's look at this from the standpoint of a quote unquote failed policy would be a policy where, hey, we're doing something, we think the stock market's going to go up. And when we did it, the stock market went down. Or we think that we're going to do something and inflation is going to go down, but instead inflation went up. Those would be failed policies. There's an intended target, you execute the policy, it doesn't have the intended purpose. What you're getting here is exactly what they told you was going to happen. They're openly telling people, we don't care about the stock market, which is code that we know the stock market is going to go down and we're not going to change our opinion because it goes down. They want the 10-year treasury yield to go down. That's been crashing now almost at 4%. So again, intended, consequence, that's actually happening. And then what they're trying to do, and maybe like the third order here, is that they actually want to revive and bring back wealth and opportunity to the working class. And there's a question mark there. I tend to think that it's going to work. Plenty of other smart people that I really respect tend to think it's not going to work. We're going to see it get played out and see what happens. But I think that is kind of from a policy perspective, really the thing to pay attention to is what is the intended purpose of this? And in this case, the intended purpose of their current strategy is to protect American companies and jobs, but also to get that 10-year yield down. And the 10-year yield is going down. So they're getting what they wanted. So that's kind of quote unquote, the tariffs are working, right? Now, that bigger, kind of more ambitious goal of help the middle class and the working class, there's a target out there that they want anyone under $150,000 of annual income to have zero federal income tax. I mean, that sounds amazing. There's millions of Americans that would be in the streets celebrating something like that. Can they pull that off? I mean, that is going to take a long time for them to figure out, how do you make the math work? How do you do it? Do you need Congress? There's a lot of questions there. And so I think we just got to wait and see what happens before we can really judge that stuff.
How much will the Federal Reserve come into this for the rest of this year? You've been very vocal. They need to cut, that they're behind. Do you think Jerome Powell will see that and use that?
I think that Jerome Powell and the Fed right now are behind the curve as they have been for years. What they have is a very difficult job because the data points that they're supposed to be looking at, things like CPI, et cetera, backwards looking in lagging data to try to make a decision today to predict the future. That's like one of the hardest things. I just described to you an impossible problem. Right? I want you to look backwards, had lagging data to make a decision today to be able to predict the future. How do they do that? Of course, they're behind the curve. And so tariffs are deflationary. Too many people think that tariffs are inflationary, but they're actually deflationary. Because what you end up doing is you end up discouraging people from buying imported goods. So now what you start to see is you're seeing a rampant production of U.S. goods, and then you're going to see consumption patterns shift to buy those American goods. But you're going to have a net smaller number of products that are bought because all of those international products that were coming into the United States, people aren't going to buy them at the same rate. And so tariffs are actually a deflationary thing. We've seen this, right? We can go to 2018 and look. There was 3 products that they ended up tariffing. They had tariffed steel, solar panels, and washer machines. All 3 of those products were cheaper within 18 months than they were before the tariffs were put in place, which goes against the entire narrative that tariffs lead to higher prices. Milton Friedman, who most people respect as a great economist, he used to say all the time that tariffs are not necessarily inflationary. Inflation comes from the expansion of the money supply. It's a monetary phenomenon. It is not anything to do with tariffs. And so people are like, oh, you're going to raise prices. No, we're going to raise prices on the imported goods, but it actually leads to domestic producers to go ahead and offer their products. And so people will say, oh, the domestic producers are going to raise their prices. That's not what's happened. Could all of a sudden people completely change the way that they've reacted to tariffs throughout history? Sure. But again, 2018, the prices were lower within 18 months. And so when you look through how this works, you can see that the Fed has to cut interest rates. Inflation right now is at 1.38% according to Trueflation. It's a real-time alternative inflation metric. So unless they are like completely off and they're saying it's 1.38 and actually the government's right at 2.8, which is more than double, then we actually have seen deflationary effects take hold. And we've crashed from January or December all the way down to now under 1.5%. You have tariffs coming, which are deflationary. The Fed better start cutting. But I think that there's a lot of reasons why they haven't done that yet. And so, let's see. Market's pricing in 3 rate cuts now for 2025. We'll see what happens.
Is it fair to counter your point that tariffs are deflationary if given enough time? Meaning you have to get the manufacturing in the United States. That could take 1 to 2 years. And maybe the counter argument would be, oh, this is executive order, not law. So people are scared. In 4 years, will this be retracted? Will we go back? Won't that take time? It'll be inflationary for maybe a year or two, and then it might be good.
Well, I think it goes back to this idea that if there's goods that Americans can't produce, I always joke that bananas and avocados ain't really our strong suit. And so those things, if there's tariffs, there's one of two things that happen. Either the prices will go up because of the tariffs, or what you're starting to see is American companies like Walmart. Walmart just went to all their suppliers and they said, you're not raising our prices. You, supplier, you're going to eat that tariff cost. They're Walmart, right? They can do that. And so now Walmart's saying, I don't care if there's tariffs. We have a contract where I'm going to buy your product for $3.20. I don't care if the tariff's 20%. You're going to eat that into your margin. That's not going to come out of our side. And so what you're able to do is you're able to actually, again, there's no inflationary impact on the consumer if that happens. Because what happened is a foreign country just had smaller margins. Now, every company's not Walmart. And so it goes back to, Chiquita Banana. Are they going to be able to do that? Or do they want to do that? How does that work? So every single product has kind of its own story, its own analysis. And I think that the one critique, right? So like people always say to me like, oh, you really think these tariffs are going to work, whatever. They never ask me like, what is the best critique against the tariffs? And in my opinion, the best critique would be, okay, in 2018, we had very surgical targeted tariffs on specific items. And those items happened to be things where we either had production already or it was fairly quick for foreign companies like the 2 South Korean washer machine manufacturers to come to the US, set up, create thousands of American jobs and get rocking and get prices down in America, right? When you go to blanket tariffs, there naturally are going to be products where we can't do that. But the thought process, and Scott Bessent, the Treasury Secretary, recently was talking about this, where he said the cost savings on most goods will make up for the cost increase on some goods, right? Now, again, sounds good. Let's see what happens, right? But I think that maybe the biggest area, so, if you were to ask me, why do I feel the way that I feel about tariffs? It's because I see everyone in agreement and offsides. This is like, it's Bitcoin all over again. It's the pandemic all over again. It's the 21-22 inflation all over again, right? When you see the media and the economist and what I call like the traditional, I hope I don't get fired financial advisors, when those 3 groups come together and they all start regurgitating the same talking points, it's very likely actually that some contrarian view is going to be accurate. And so the more that they keep yelling tariffs are bad, and then you go and you talk to them, they're not even doing analysis. They're just like, oh, in economics 101 class, I got told tariffs are inflationary. I say, okay, great. If tariffs are inflationary, why are the countries that have such high tariffs on the rest of the world, why don't they have high inflation? Well, it's not the same. It's, and then it like becomes this like, we just start talking in circles. And so there's countries that have 25% VATs, 25%, every good. Why don't they have high inflation? Well, it's because tariffs are not inflationary. Consumption taxes are not inflationary, right? If they were changing, if they were increasing every year, now if you had a VAT that every year went up 10%, that would be inflationary because every single year you would be increasing the cost. That's not what happens. We put on a tariff and we leave it there. That's it. And so the market will work it out, right? It'll take a couple of months. You'll figure out what is going to be the new price. Some goods will be a little bit more expensive. Some goods will be a little bit less expensive. And then that's it. That's the new price. There's no change in the prices. And so it just goes back to this idea that if you continuously just repeat what you're hearing from the mainstream media or your economics professor, good luck to you. But I think that it was pretty clear what these guys were going to do. I talked about it ad nauseum, saying that I think they should do 5 to 10% blanket tariffs and then use it as an incentive system. Right now, we use tariffs punitively. You do something we don't like, we hit you with tariffs. And it's kind of this like tit for tat counterpunch type thing. Just put 10% tariffs like they're going to do, right? I thought 5% would be a better number, but they went to 10, even better, right? Put 10% and now take tariffs off of the goods that you want coming into your country. And everybody else you're going to pay the tariff. That's fine. But that way, you've now created an incentive system rather than a punitive system, which I think is a much, much better way to do it. And I think the government will raise more revenue in that system too.
Let's talk about Bitcoin. Altcoin Daily speaks to an audience of over 3 million subscribers globally. Woo! And they see Bitcoin and they think, oh, it's institutionalized, especially new people coming in. Is this for me? It seems so big. I missed the boat. Could you describe the value proposition of Bitcoin in 2025?
Well, the stock market's pretty big. Did you miss that boat? Real estate's pretty big. Did you miss that boat? Got a lot of dollars in your bank account. Did you miss that boat? Right? Big does not mean you missed it. Sure. Do the returns on a percentage basis come down? Absolutely. Right? Something gets much larger. It's de-risked, all this kind of stuff. But if you really think about what's happening in kind of finance in general, maybe the stock market is returning anywhere between 8 to 10% on average, depending on which index you look at and kind of timeframes and stuff. Real estate is probably, high single digits to mid single digit return. Bitcoin has been compounding right now at 70, 75% annually for a decade. And so that's going to come down. But if it's returning 30% annually compound growth for the next decade, it's going to destroy not only the indexes and kind of beta exposure to asset classes, but it's going to destroy pretty much every hedge fund too. And so I don't know what that number is going to be. If it's at 75, well, it has to go to 70, then it'll go to 65, then it'll go to 60, then it'll go to 50. How quickly does it get to 30? Could be a year, could be 10 years. I don't know. But I just think that this idea of looking in the rearview mirror and saying, well, other people who got in before I did, they had bigger returns. Duh, because they took more risk, right? But it's a relative comparison to if you have $1 right now, where are you going to put it? Can you outperform Bitcoin by investing in any other asset class or asset? Some people will. A lot of people won't. And so if you think you can do that, great, knock yourself out. Hope you're right. But if you can't outperform it, then you got to buy it. And that's the way I kind of look at, the Bitcoin value proposition is just there's some rate of return that it's going to deliver. And I think that rate of return is probably higher than most other assets.
And you believe Bitcoin will return to all-time highs by the end of the year. In 10 years, where will Bitcoin be?
At least another zero on it, probably. Right? So, it's easy to say when it's only at 80,000. But I don't know. It'd be, hundreds of thousands to, maybe it's over 1 million. I don't know. Right? The thing that you kind of learn being in Bitcoin for a while is you literally have no clue where the price is going. But you just know it's going up over a long period of time, which is such a cop-out answer. But if you're really intellectually honest, it's is it going to go to 200, 400, 600, 800, or 1 million? I don't know. You choose, right? I'll go with your number. But what you do know is that structurally, this thing will continue to gain in value over a long period of time. And so over 10 years, it will be higher than it is today, right? How much higher? How much are they devaluing the currency? What is the amount of people who own Bitcoin today who are not willing to sell? How much of the government start to get involved with large pools of capital? Like, there's so many different, kind of inputs to that it's impossible to know.
Is it fair to say, well, Bitcoin's probably going up forever because the US dollar and fiat currencies are probably getting devalued forever?
Of course.
That's what I thought. Pomp, best crypto investing advice during a recession.
Well, I think that the best advice during a recession actually starts before the recession, which is you always want to have cash if a recession is coming, right? You want to buy things when they go on sale. And then the other thing is, don't try to time the bottom. Be happy with buying things that are less than they used to be worth. But if you try to time the bottom, you're likely to miss. So dollar cost average, if something sells off 20, 30, 40% and you start buying, buy through the bull market, or through the bear market. If you can buy through that bear market, you're not going to get the exact bottom, but that's okay. On a blended basis, you're probably going to do okay, right? And one of the best examples that I explain to people is if you had started buying at the top of the market in 2021 and just dollar cost average, $100 a week, before Bitcoin went back to an all-time high, you actually would have been up significant because you basically accumulated on the way down and then you accumulated when it went sideways. And so when the price started to rise again, you had bought so much Bitcoin at lower prices that then that price ended up actually, really impacting the portfolio value. And so just dollar cost averaging is always the best strategy in my mind.
What will be the 3 best performing assets coming out of 2025?
I think that Bitcoin, gold, and AI companies. AI companies are probably the private AI companies. I think will outperform the public ones. I picked those 3 because I think there's a lot of people who just know sound money principles are going to be valuable over a long period of time. So they're going to keep buying those things. Gold's going up right now, which I think the gold bugs are excited about. And then the AI company is all about productivity, right? It's creating value with as few resources as possible, which is pretty helpful.
In our final 10 minutes, I want to ask you about altcoins. I remember around end of 2023, beginning of 2024, you talked about you sold your Ethereum for Solana. Great call at the time. Are you still in altcoins today?
Yeah, I mean, look, I think our portfolio, the largest positions in Bitcoin, we're never going to sell it. I'm just going to give that to my grandkids one day and hope that it's worth more than it is today. With the Solana position, that's the second largest position. I look at that. I have no clue. I doubt that I'll be holding it, 5 or 10 years from now. But as you said, pretty decent timing. And I just think that it went back to the simple rule, like follow the developers, right? The thing's not going to die. Developers are moving there. It's got better performance. Odds are it's going to outperform. And then, we've got pretty immaterial positions in small things that aren't even worth, mentioning. But I would say 95%, 97%, something like that probably is in Bitcoin and Solana. Bitcoin is a long-term conviction. Solana, you can almost think of it as it's a periodic point-to-point trade almost. And the entire idea is to just use it to get more Bitcoin.
I remember we had you on in 2020, 2021, and you were very consistent with the mindset then that while Bitcoin is fundamentally different, the value is censorship resistant, permissionless money. These altcoins, DApp platforms, the consumer will continue just to prioritize faster, cheaper, better user experience. So that was a big unknown at the time. So I understand why Solana over Ethereum. That totally makes sense. Why Solana in the sense that you could go for a SWI, or you could expand the risk and go for something that even has a better user experience?
Maybe they have better user experiences, maybe they don't. At this point, given the portfolio size and kind of my risk tolerance, I don't need to be in the best performing asset. What I really want to do is I want to outperform what I would consider more my traditional investment peers. So I'm not trying to outperform the best crypto trader or kind of the highest risk taker in crypto. What I want to do is I want to outperform kind of traditional Wall Street, traditional investing. And so things like Bitcoin and Solana, although they may not be the best performing crypto asset, they still really, really outperform kind of traditional assets. And so that's kind of where I want to sit, right? I want to be in the riskiest bucket of the risk takers. I want to be in the riskiest bucket of the conservative people. And sitting there leads to outperformance. I got a lot of friends who, more power to them. They're very good. They, have made a lot of money on things I don't even know how to pronounce, but just not my game. And frankly, I don't know if I've got temperament to go and do that stuff. So just, do what you know and know what you're trying to accomplish and just stay focused on that.
Pump, I believe in altcoin season. And what that means to me is Bitcoin dominance. It will eventually, it's around 60% right now. It'll eventually top out. And not that Bitcoin won't keep going up, but people will say, oh, I can get more return in the short period of time, 2 months, 6 months, whatever it is, in these altcoins. And for those 4 months or whatever, that's when altcoin season occurs. Do you believe we'll see an altcoin season again in that sense?
If we get like very large market froth, yes. Mainly just because what is froth? Froth is exuberance of people looking for risk taking. And so what they do is they're like, okay, where can I go to the furthest end of the risk curve? Like that's all the altcoins. If we don't get that froth, then no. And I think that's the big question is now that market participants have drastically changed and there's a lot of kind of these Wall Street firms, regulation is changing, the government is owning Bitcoin, all these different, kind of components are evolving. Are we going to get the froth or is it more of kind of just like a grind up? If it's a grind up, then I think that Bitcoin still ends up holding a lot of that dominance. But if we still get these kind of very frothy market tops, then absolutely you'll see, kind of that alt season that everyone salivates over if they're holding those assets.
Pump, thank you so much for joining me. Links to all your stuff are down below. Your business show on X, it's killing it. Over 1 million views for some of the episodes and only growing, so that's huge. I also know you just wrote the book. Would you share with the audience where they can find you?
Yeah, just go to Twitter's probably, or X is the easiest place. Just at a Pompliano, and then if they want every morning, I probably put too much time into it at this point. I write a letter, and you can just get that at pompletter.com.
Awesome, man. Appreciate you.
Thanks for having me.